I think it's fine.
All right, so welcome back to stage again, Torb. We are halfway through the event of the day, and now moving on to the next session. We have experts with me who will discuss on blockchain, smart contracts, DeFi, CBDC, and the future of banking fueled by RegTech. This session will be moderated by Torb Patience, founder and CEO of ID Clear. Over to you, Torb.
Thank you very much. So welcome, everyone. Thank you again to RegTech and Mona for hosting us. So I thank you for the kind introduction. So as noted, I'm the founder and CEO of ID Clear. We are building a centralized infrastructure and mutualized infrastructure for financial crime risk management. I'm joined today by Steve Tunstall, Henk Jan Hugenum, and Nalwazi Lope. I'll hand over for them to introduce themselves. Steve, would you like to introduce yourself?
Sure, no problem. Today, I mean, I wear a few different hats, but
you're muted, Steve.
Today, I'm representing WhatsPay. So WhatsPay is specifically working in the back end of CBDCs. We've been looking at this for 3 years, so we got a bit of a head start on most other people, and we've been surprised how things have grown so quickly. But I'll be sharing some of my experiences and look forward to hearing some of the others too. Thank you.
Thank you, Henk. Thank you, Steve. Sorry, Henk, would you like to introduce yourself?
Yeah, hi, my name is Henk Hogendoorn. I'm the Chief Financial Sector in Qatar Financial Center. We are one of the ambitious and emerging financial sectors in the Middle East. And many things are happening. I'm not a regulator, but I'm an ex-banker, and we try to move to the next level in Qatar and in the region. And I'm actively involved in talking to the regulators to see how we can help, show the trends, show the best practices, and see how we can move in a quicker, more accelerated way to the future. That's it.
Thank you very much. And Nalwazi.
Hello, everyone. I'm Nalwazi Shope. I'm grateful to be a part of this excellent panel and this event. My background is in central banking and financial regulation and supervision. Can you hear me?
Yes.
Thank you.
No
So
I think you are on mute. Apologies, all. I think we may be having some minor technical difficulties.
Can you hear me now?
Yeah, no problem. I think the problem's at Targ's end, to be honest.
Okay. So I come with my
okay, I think we still have Nalwazi with us.
Yeah, I come with my background in financial regulation, having worked for a regulator, consulting in the Center for Financial Inclusion and Regulation, and now being the regulatory lead in all the course offerings that we have at Digital Frontiers, from course design to finding our SMEs to course delivery. So I'll be bringing my experience from the regulatory point of view into our discussions, and I'm looking forward to having this time with you all, even though it's quite limited. Thank you.
Thank you, Nalwazi. I will just kick off the questions with one regarding the adoption of blockchain. So in Deloitte's 2021 global. Hi, apologies. Having some slight technical difficulties on my side.
Okay, we seem to have lost our moderator, so I shall step in. Give me a moment while I find the questions, Hank. Give me a tick. Yeah, so the sort of thing that we wanted to talk about, where are we? Q1. So So Targ was quoting from a Deloitte blockchain survey of nearly 2,000 execs, and 76% of those respondents were saying they thought digital assets would be a strong alternative or an outright replacement to fiat. Do you see, Henk, that tokenization of sovereign currencies is feasible? And how do you think that will affect the financial industry?
Yeah, I think there are many questions in here. So first of all, I think the adoption of blockchain, and I'm also interested in Noazi's view on this, because blockchain, the commercial guys and the fintech industry, we're all convinced that blockchain gives more transparency and should be. There are questions like, does the token really exist? Is the asset there? Is it genuine? Who's really the owner? How do I know it's not stolen? All these things come up in the mind of the regulator. So trust, confidence, I think is crucial. But I see also regulators using, with all due respect, of the métier, using people that are trained as old-fashioned regulating technology. Those things need to be solved, and regulators need to work together to accelerate, to keep up with the pace that the industry is forcing them upon. And then your question specifically on the sovereign, I think the CBDCs, the central bank digital currencies, might be the solution actually for regulators to catch up, because that gives them the opportunity to control things more and bring the country into the next level. So I'm guessing that this pickup of CBDCs will go faster than we all expect. And I can see in the Middle East, well, in general, the countries were against it. Now there seems to be a more open mind towards adopting CBDCs and preparing for it. I hope that answers the first questions.
Thank you, Henk. And I am now back following some slight technical issues there. So in terms of that rapid adoption, do you see that as initially starting very much in the banking sector and a replacement at the banking level for central bank accounts, or a more widespread use of central bank digital currencies?
To me or to somebody else?
To you, Henk, and to the wider panel.
Yeah, so maybe it's good to hear a regulator's view on this. Noazi? Yeah, so otherwise I would say basically the adoption has to come much quicker. And I can see people trying to get their head around it, don't know what to do. I would encourage regulators to basically work together. There are all kinds of organizations like GDF in the UK that exchange information between the banks and the regulators. The banks seem to be further than the regulators. Some of the banks are definitely leading. Some of the banks, especially also here in the Middle East and probably other parts, are way behind. They don't even know what the difference between the blockchain and the Bitcoin. So, and it's the regulator's task to basically align them and take the lead in this innovation. If they don't do it, then the market will dictate the pace, and then you get all these decentralized systems that can actually disrupt even the local markets. So it's a cry for action.
And do you see this changing the face of regulation? Sorry, Noazi.
Definitely. I just wanted to add to what Hank said on how we see this changing the future of regulation and RegTech around CBDCs. Central banks should start off with the mind of them complementing cash, because when you think about it, in the case of sub-Saharan Africa, cash is still king. And a lot of innovations have been coming into the market, and a lot of them have been in the payment space, trying to encourage consumers to be more digitally inclined. but there are significant barriers in that area due to limited financial literacy, education, and also limited digital literacy. And so, as much as those innovations are there, people are still not taking them up because, if I can put it in simple words, they're afraid of them and don't trust them. And so, when you think now to jumping to CBDCs, it brings in a lot of concepts, apart from one that Hank mentioned, which I fully agree with, is the limited capacity of the regulator to fully understand not only what the difference is between CBDC, as a commercial bank money, and your e-money from your like your mobile money, which we have from my home country, which is Eswatini, and your other cryptocurrencies. I mean, last year we ran a central bank digital currency workshop only for regulators and only for financial sector authorities. And some of them still didn't even understand the difference between those. And so there's a capacity gap, and there's also a capability gap because you find that the departments are understaffed. And so they really can't afford to put the resources into it, even if they would like to, because they don't have enough people in the relevant departments to address or do more research into this. So when it comes to RegTech, I think it's the same case. They are interested in RegTech. They want to implement. They see the benefits, but no one they don't have enough capacity to have dedicated staff to sit down and think, yes, we are supporting this, but how are we? What are the risks, and how do we plan to mitigate them? Because in there comes in your third-party risk, comes in your cybersecurity risk. This is important data. If someone breaches into that the data that's there, it will cause big mistrust in the financial sector, and then cash will truly and forever be king in that specific jurisdiction. Let me leave it there.
That makes a lot of sense. So obviously that's a significant risk that's presented, but in terms of the opportunities that it presents, is that going to be met equally by all sectors of society? And what does it mean in terms of, what do you feel it means in terms of people's privacy, in terms of their financial transactions and activities?
I'm glad you asked that, because I was doing a study for another purpose, and in that study I was looking at the 54 African countries and saw that only 33 of them have data protection laws. And even with them having data protection laws, then when you go deeper, you see that very few of them actually are enforcing them, where there's an independent or autonomous information regulator. And some of them have just gotten the laws passed, and other countries will say we have one, but it's still a bill that has to go through parliament. And so if there's lack of data protection legislation, there's also a big gap where the consumer must just blindly trust the privacy terms and conditions of the financial institution, and trust that their data won't be sold to data brokers. And then further on, when you look at cybercrime legislations, you find that they are also as limited, if not less. I think it's the 27 countries in Africa have cybercrime legislations, and in the same light, few of them are actually enforcing them. Some of them have it as an act that's just been put in place, but are not enforced. Some of them have it as a bill. Some of them have it just passed by Parliament. And so there's still a lot of legal and regulatory infrastructure barriers to wanting to implement these innovations like RegTech. That foundation needs to be built such that the innovations can soar.
That makes a great deal of sense. So one of the most widely touted promises of blockchain technology is that ability to tackle de-risking and financial exclusion through introducing low-cost, low friction, decentralized financial services. And similar to digitization of central bank currencies, do we think this is even possible? And are we seeing this manifest in reality? Nawazi, I'd be interested to hear your thoughts.
Well, decentralized finance is still relatively new. And so we do see the potentials for financial inclusion, as I saw in a recent BIS publication. But at the same time, yes, there have been collaborations where it has use cases for credit, accessing credit in a way that is not in a way that's not in a methodology, let me say, that's not used by traditional banking. So it allows inclusion that way, but obviously you still have to monitor household debt and manage that. But so there is the inclusionary element in that case, but in the long run, it still needs to be studied because DeFi is still relatively nascent. So there's the lending aspect, which is big, especially if you're looking at microloans to lift people out of poverty, and they don't have to have the collateral that's expected by your traditional banks. But at the same time, it's called decentralized finance, but and the BIS paper mentioned this, that it's an illusion of decentralized finance because somewhere it must be centralized by the different players in the space, and so it needs to be watched cautiously, and even regulators can't speak to it yet because, again, to mention a point you said in your keynote, they still need to learn about it and fully understand it before they can say, hey, okay, now we can make a statement about this. So yes, when you look at de-risking, it definitely has the potential because it lowers those barriers for remittances that have up previously there, like exchange control measures, um, uh, also cross-border regulatory regimes, and also interoperability issues or challenges, and lack of connectivity, because some of the innovations I've seen in the space, as I've been reading up, can do offline payments. Also, they have updated, up-to-date IT systems, and they have the availability of all the data they need from their customers. So there's a great potential for it to work towards tackling de-risking and financial exclusion. But at the same time, the risk of financial exclusion can be increased through the digital divide. If some people lack digital skills, they won't want to engage, and therefore they'll be excluded. As then, this is an unintended consequence, unfortunately. As you're seeing, everyone's talk about the digital economy as well. Same challenge. People who lack the digital skills will be excluded, and that's an unintended consequence. Thank you.
Thank you, Nawazi. And so, to the panel more broadly, how do we avoid a future where those who might benefit the most from the blockchain innovations get left behind? I mean, we see it currently. Obviously, I helped my parents to buy their first cryptocurrencies last year. My father works in technology, but it was still a very challenging thing to get to wrap his head around. How do we avoid further widening existing inequalities?
I think it's a good question, and I think there's a big problem around this. That those if we step back a little bit, if we look at the existing banking system and financial services generally, it caters pretty well for the first 1 billion of the population on the planet. Everyone else below that is sort of struggling a bit to get the right sort of level of financial services. And I think that's it's indicative of the way the existing banking system has worked for so many years. There is a huge potential that the introduction of blockchain technology through CBDCs or other methodologies could really make a huge difference in this space. But actually, the people who need it the most are the ones where there's the least adoption of digital. And as Nawazi explained very clearly, the regulators don't necessarily have the strength in depth to be able to do the leapfrog process to get that implemented. So I think that's a bit of an unsolved issue at the moment. Those jurisdictions that need these functions the most are perhaps the less prepared to be able to implement. And I think, in particular, if you look at some of the bigger currency jurisdictions around the world, you look at the US dollar, the yen, the pound, the euro, they don't really need a CBDC because the system works pretty well for them already and their consumers. The places where you need CBDCs is a little bit less obvious. But getting that implemented and dealing with the trust issues that Nawazi mentioned already is very difficult, and it's going to be an interesting journey. That's exactly what we're doing in the back end, is helping a few countries and banks in those countries to go down that journey. But it is a challenge, and I think it remains to be seen how that will play out. Just because it's difficult doesn't mean we shouldn't do it, though. So if we follow the example of the Bahamas sand dollar, for example, that's got in reasonably well. I know there was a couple of decent exercises in Uruguay as well, but I think they've stopped now. So there are some decent examples that can be followed around the world. And I think there's definitely going to have to be a bit of a trial and error process to go along that line. But again, Nawazi nailed it. If you lose that trust once, then maybe it'll never come back. Thank you.
Indeed. Thank you very much, Steve.
Can I add to that? Because what I see, for instance, in the Middle East is there's a big expat population of workers from Pakistan, India, Bangladesh, Nepal, and so basically many of them come from illiterate, financial illiterate background. They catch up very quickly. So I think the mindset of young people specifically is that they can do this quickly, but it needs, as Nawazi said, it needs the guidance and the trust from the central bank. And I think also in Africa, I was in Rwanda recently. They do all kind of experiments to try to avoid cash. And there's a great company called MobiCash in Rwanda and Paycode, I think, in some of the South African continent countries. And they are basically giving people physical cards with a decentralized option. Even if they don't have a telephone, they can still bank. So I think the solution probably has to come from the areas where we don't expect it from, and as it always has to come from more mature markets, which I think is not fair, because I think what has happened in Kenya with M-Pesa, they quickly were able to educate a large population by all the things that are happening in the African countries, will be an example for others, because this generation has to build it and use it. And I see the eagerness with young people.
Yes, yeah, indeed. It's very, very good points. And it was an interesting study on fintech in the time of COVID-19 by Jonathan Farr and Mrinal Mishrab of the University of Zurich. And it found that at first incumbents saw the largest growth in their digital offerings, but then actually over time, it was in fact big tech and newer fintech companies that outperformed over time. So this was unbundled products and niche products that had higher growth. What do you think that this means for the future of financial services and banking going forward, that those all-in-one services are showing less progress, and how's that likely to shape the future of RegTech? Steve?
Yeah, it's definitely the case that there's a lot of new businesses coming through that are challenging the incumbents, and probably the main reason the incumbents are changing is to try and tackle that. I mean, I live in Singapore, and if you look across Southeast Asia, we've had a real dominance of super apps coming through in the last few years. So Grab, Gojek, similar type apps are now offering significant financial services. And when I talk to people I know well in the financial sector and the insurance sector, and what they are able to do and what they're able to achieve again is that confidence and trust. So if I use the Grab or Gojek app every day to be able to order my food, order a car, order a hairdresser, whatever it is, I have confidence that that works, and I have confidence that those people are going to be there for me. If I talk to my bank maybe once a year, or I talk to my insurance company once a year, I don't know who these people are. I have no relationship with them, and I don't really know whether I can trust them. The key issue for many people is, well, look, if I use Grab for this, why don't I use it for my insurance? Why don't I start using it for my banking? Because I know their app works, it's smooth, it's effective, and I'm a familiar face. Even though it's just an online face, it's still that familiarity. So I think those super apps are definitely going to continue to dominate if they can work out a way to navigate the regulatory space effectively. I think what we have seen is some of the larger companies, and of course the ill-fated Libra exercise for Meta is a good example. Also, Amazon went into insurance at one stage and came out. I think Google did the same sort of thing. It's working out the access point for those big companies that's perhaps their biggest trick.
Agreed. So we are now approaching the end of our session. Nolwazi, Henk, do you have any final comments regarding what we've been discussing today?
Yeah, so I think the most important thing, and I realize I deal with regulators that look mainly at the wholesale space and qualified investors, but I would urge the regulators, and hopefully many are listening to RegTech, is to don't reinvent the wheel. Talk to your colleagues, team up with other regulators around you in associations, and use the research that is done by somebody else. Don't do it yourself again, and hire the right people. Hire people from the industry, or team up with fintech companies like Steve's, that prepare regulators for CBDCs. Take action. You cannot do this with your existing lot. That is my message.
Thanks.
Yeah, and for me, my closing comments would be, and I always like to emphasize this, that as countries are considering CBDCs and how to apply blockchain in their economies, and seeing that the whole world is moving towards a digital economy, that regulators should emphasize and prioritize engagement with the private sector, and that they must make sure that as much as we use learnings from other countries and there's literature that they can use to research, that they always make sure that their solution is developed to their specific context, and that they don't do a copy-paste exercise, because the context of South Africa, as much as we're all SADC, let me not use South Africa, the context of Botswana is not the same as the context in Malawi. It's very different. And so that is always what I like to emphasize, that designed for your specific context. Thank you.
Excellent. Thank you so much. So it's very, very interesting to get that global perspective. Thank you again to the panelists. It was a very, very good conversation. And thank you again to the RegTech Revolution team for hosting us.
Thank you very much. Bye, everybody.
Thank you. Bye.
All right. Thank you so much, Tom.
Thank you. Bye, everyone.
Panelists for the insightful discussion. And unfortunately, we don't have much time. So let's move on to